Welcome to America's Commercial Real Estate Show, your source for commercial real estate intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us today. This segment is brought to you by Commercial Agent Success Strategies. It is the ultimate training for commercial agents. Check it out at commercialagentsuccess.com. Well, today we have an incredible show for you. The show is on tariffs, and I'm calling it Tariffs. Are they terrific or terrible? And we're going to look at tariffs and how they're impacting the economy, how they're impacting commercial real estate, and hey, really, should we care about tariffs? And are they terrible, or in the long run, are they beneficial? And how and when will commercial real estate tenants be impacted? And which sectors in commercial real estate should we think about related to tariffs and how they might be affected? Which ones might be affected the most? I have two of my most favorite guests on the show today. First, please welcome Mitch Roschelle. Mitch is a partner with PwC. Mitch, thanks for joining us, sir.
Thanks, Michael. When you said you had two of your favorite guests, I was hoping that I was one of those two. Would have been awkward if I was the third.
You're definitely one of them, and we appreciate you.
Thank you. You're too kind.
We appreciate you being on. So first of all, Mitch, if we're in the commercial real estate world, should we really care about tariffs? Is it a big deal?
I don't know that it's just tariffs that you care about. I think what you do care about as a commercial real estate entrepreneur, investor, service provider, wherever you are in the real estate ecosystem, I think you care about the economy. Right. So the question is, not that you asked a bad question, but the question is, what's going on in the economy right now, and what role is tariffs, or are the tariffs playing? And I think that trade is a big issue in the economy. And if you step back a little bit, we've seen countries become more protective, more nationalistic, and it's not just rhetoric in the United States. We're seeing that across other countries in Western Europe. And we've also been seeing over that same period of time, aside from the imposition of tariffs over the last, let's say, 18 months from the United States, we've also seen the Chinese economy contracting. So all of these moving parts are interconnected, and it's almost a five-dimensional Rubik's Cube. Such a thing does not exist, but you can't turn one side, if you stick with my metaphor, without it impacting the other side. So if you look at the fact that the German economy is slowing, and we can unpack all of these things, if you look at the fact that we're now up to $16 trillion, trillion with a T, of sovereign debt around the world that has a negative yield. The other day I saw that the Swiss 50-year Treasury, their equivalent, we don't have a 50-year Treasury, but the Swiss 50-year Treasury security had a negative yield. So all of those are interconnected. All of those issues are connected. So coming back home, what does all of that mean for our economy? I don't believe that our economy is immune to all of those external forces. That said, 70% of our economy is the consumer. The consumer is ignoring a lot of this because they haven't felt it, and the consumer is chugging along and continuing to drive our economy forward. So the real estate is connected to the economy. The economy is still strong. So real estate investors probably don't have tariffs on their radar screen because they don't see the economy slowing down, and real estate investors care about the economy.
Right. Well, and our crowd, our listeners, our viewers are very astute on this show, and it seems like the ones that I talk to really are concerned about the economy. They're concerned about where we are in the cycle, and they're concerned with the big R word, right? Recession and a downturn, and when it might come. And it's like we all expect some downturn to come at some point, right? But are tariffs and some of these issues impacting that timing? Mitch, what do you expect there?
It's complicated, and all of the data points we have, I don't know when this is going to air, so I don't want to timestamp my remark, but on a daily basis, we have a data point, whether it be a jobs report or an ADP report or PMI, Purchasing Managers Index, or ICM. I mean, there's so many different data points and weekly jobless claims. I can go on and on. I would say, not to mention retail sales, consumer confidence, consumer sentiment. If you look at those data points in the collective and not individually, the preponderance of the evidence suggests that our economy is still expanding and growing. So what is a recession? A recession is 2 consecutive quarters of negative GDP growth. In your backyard, the Atlanta Fed publishes something called GDP Now, where they take every data point that's out there and they put it into their big model and their algorithms, and they project GDP. They're still projecting third quarter GDP to be above 2%. And, it could go down to 1.9, it could pop back up to 2.2. So I don't understand why we're talking about recession when all evidence suggests that our economy is continuing to expand. Now, it's expanding on the trend line. It's not expanding above the trend line like it was last year when it was in the 3% range. However, 2% growth is still phenomenal. And especially when you compare it to trading partners like Germany that had negative GDP growth, the UK that had negative GDP growth both in the second quarter, and a massive slowdown of economic expansion in China. It's by comparison, we're still doing well. I think the R word has gotten a lot of attention because we're in an election cycle. I think the R word has gotten a lot of attention in traditional media just because it's a business story that people concern themselves with. But the evidence doesn't point to it in the near term, and the economists that I talk to regularly aren't signaling it. So will there be a recession? Of course, at some point. But it being around the corner, as some might suspect, doesn't look that way.
Yeah, and I agree that all the economists and all the owners of large properties that I talk to kind of feel the same way, that all the indicators are positive, things look real good, business is moving along. But some tenants are being impacted now by tariffs, right? So are there certain tenants or commercial real estate sectors that do you think we should consider related to tariffs?
What I would do is I would look at small business confidence in general, because the job creation engine is small business, and small business and job creation is the real fuel for real estate demand, right? More jobs need more space. More employees need more space. So certainly there are sectors that are impacted in the short run. The manufacturing sector could be impacted. Anybody part of the supply chain in steel and aluminum, because that's the first tariffs, lest we forget, that were imposed over a year ago. Importers, exporters. The question that isn't entirely clear is if we had that round of tariffs that hit on September 1st. There were more tariffs coming down the road. We also have trade talks that look like, for the time being, they're back on track. One of the concessions that the Chinese want in conjunction with restarting trade talks is for us to turn off the tariffs as a sign of good faith. The administration in the near term doesn't appear to be willing to do that, but if they can get the Chinese to the table, that's a possibility. I think it's not the tariffs, Michael. I think it's the uncertainty surrounding them that is starting to paralyze people. But to your question of which sectors, it's pretty pervasive that if the tariffs continue, it will start impacting all sectors. So let's say you have a software company. You wouldn't think, as a tenant, you wouldn't think that the software company is impacted by tariffs. But if the customers of the software company are in fact impacted by tariffs, and the tariffs are something that can be passed along to their customers, then that software company is going to have less disposable corporate income to spend, which may mean, their customers may have less disposable income, which may mean that they have less money for upgrading technology. So our economy, which is a service economy, 70% of our economy is services. Let's remember that those service companies do in fact service the other 30%, which is the manufacturing piece. And import-export is a service. So buried in that 70% are those companies that just import and don't make. So I think it's going to be pretty wide, the impact, if this continues and we're finding ourselves dealing with, 25% tariffs on imports.
Well, before we let you go, Mitch, is it worth it? Is this short-term pain for long-term gain?
The answer is China's economy, which grew at close to double digits for many years, assuming you can believe their GDP numbers, has grown dramatically, and multiple administrations, so I'm not pointing fingers at any one presidential administration, talked about the talked about the trade imbalance and talked about some of the other issues with China, intellectual property theft, forced transfer of intellectual property, and nothing was really done about it. So the question is, if you do believe that China's growth and China's prosperity has been at the expense of American business, and there's another side of that as well, then you would be willing to endure the short-term pain if, in fact, there was a possibility of long-term gain. So my view is that fair trade is good for growth in both economies. And right now, it's not clear that our trade with China has been bilaterally fair. So if this is an effort to improve fairness on both sides, then it could be worth it. But what's been challenging for business is the uncertainty with the tariffs are on, the tariffs are on, the tariffs are on, the tariffs are on. That's been very, very hard for business owners to navigate.
Yeah, uncertainty is not good for the economy or commercial real estate. Well, Mitch, great information as usual, sir. Thank you for joining us.
Michael, always a pleasure, and I think I'm heading down your way in a month or so for Emerging Trends.
Yes.
And I'm looking forward to be back on your air and in Studio One, delivering the results of the Emerging Trends in Real Estate 2020 report.
Exactly. I'm looking forward to it. See you then, Mitch. Thank you.
All right. Cheers.
All right. Well, stay with us. We're going to have more on tariffs and the impact on the economy and commercial real estate. Stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Bull Realty. For customized asset and occupancy solutions, visit bullrealty.com. Commercial Agent Success Strategies. Incredible training for commercial agents. Visit commercialagentsuccess.com.